Hi guys, it's well, it is the 20th of February here, so it is Wednesday morning, very early in the morning for some reason. I usually wake up in the middle of the night and it's 4:30. Right, dollar Canadian. This was very frustrating yesterday. So, looking at the hourly chart, we had the 100 and 200 hour moving averages, which were doing the job of holding this market. And when you look at the trend line that I've got on here as well, the 2.5 week trend line, and the 23.6% fib up here, it's 132.76. It looked like this pair was going to turn around and dump, and that's exactly what it did. But this spike up here caught me anyway. I had a stop in at 132.80. It was obviously too tight. The problem is at the moment we're not getting much movement, so whereas I used to run stops of 30-40 pips, I'm now trying to look at 20 pips to make the risk reward ratios work. Because for example, this trade, well, we only dumped in the end. If we had been short around 60, there was only, sort of 60 pips in it maximum. You don't really want to be risking 40 pips if we'd only come down as far as 132.20. Okay, there was a potential 60 pips in the trade, but I wasn't sure about that. Anyway, this is what I'm trying to do: run stops of 20-25 pips rather than 35 or 40 pips to just give us a bit more of an edge. But in this case, it didn't work. But the pair does still look like it can head lower. If we bounce up here again, it would be worth a short. Anyway, it's just a small trade. It's only on the hourly chart. Not a big deal, but it's a bit frustrating. Just to remind you about the dollar index, I've talked about a potential head and shoulders pattern here. With this negative candle that I saw on Friday, I did suggest that this could be forming the right shoulder, but don't do anything yet. We have to be sure, we have to get the confirmation. Well, we are lower, so at least that is going according to plan. You can see that we found support around the 55-day, 100-day moving averages and the lower and the mid point of the Bollinger Bands. So that's held. Obviously, we'll need to get below there if we are to test the 200-day moving average and the neckline, and that's the break point that we would need to be selling, unless you've decided to preempt that and get short here. But there's an obvious reason why the dollar index has found support there for the time being. The dollar is pretty boring. We've bounced back to the 100-day moving average. I've got a sell up there at 155.65, 71.55.65. It worked last time. We'll see if it works this time. We've been at 71.73, so nothing too dramatic so far. We could still turn around from there. I can tell you on the 4-hour chart, it looks helpful. We've got the 500 period moving average at 71.76. So as long as we stay below there, we're okay. We've got very, very much sideways moving averages on the short-term charts, which, for obvious reasons, we're only going sideways. We'll need to see it back below 71.50, and then obviously it'll look good for our shorts. New Zealand dollar, I haven't got a clue what's going on here. We've got a negative candle on Monday. This candle on Tuesday is looking a lot more positive. I've got sells up at around 67.40.50, which really is just around the previous high up here, Bollinger Band, because we're in a sideways trend. And I've got buys down at 69.30.40. Sorry, 69.30.40. Yeah, is my sell, and 67.50, 67.40 is my buy, purely because it's a 200 and 100-day moving average support down here, which worked last time. Let's see if it works again. By the time we get there, this trend line would also be lending further support. So other than that, you can see it's just a sideways mess, but the Bollinger Band seems to be holding, which is what they should do in a sideways trend. Dollar yen's in a bull trend, has been for the last, well, since the beginning of the year. The daily chart doesn't really tell me an awful lot, so I'm going to move on to the only thing that does really make any sense on the dollar yen, which is the hourly chart. And it's the moving averages that are making sense. The 100 period moving averages was doing a good job until today. The 200 period moving average is offering support, but other than that, I've really got nothing to go on with this pair. The euro, well, I'd have more fun trading, sticking forks in my eyes than trading this pair. It just doesn't throw up any opportunities from what I can see. The short-term charts even don't really work at the moment. As you can see, moving averages aren't really working. Fibs aren't working. It's just a horrible sideways mess. That's what happens. Well, I was going to say towards the end of a sideways trend, but I don't know that this is the end of a sideways trend. But of course, the longer you trade you know, sideways, the more you trade over and over and over the same prices, and the less clear the support and resistance levels are. So right now I'm clueless on this one. Gold, one of my favorite markets. Okay, we had this resistance up at 13.26.28 from a long-term trend line and the 500-week moving average, which worked pretty well last time because we peaked at 13.22 and reversed. Right, this week it's been, actually, it was this one, wasn't it? 13.26, 13.28. Where did we get to? 13.26, that was it. And then on the bounce, I was looking to see if that would hold again. Well, it didn't hold, so the shorts were stopped, but the idea was to reverse into a long if we were stopped. I did write that a break higher was a strong buy signal, and what a terrific buy signal that was. We absolutely rocketed up to 13.41, 13.42. I see no reason why this will not continue. If we're lucky enough to have a pullback to 13.30, 13.25, you would understand why that would be a good buying opportunity, but I don't see it. I think this is just going to continue on. It looks very strong. You look at the weekly chart, there's just nothing really in the way of 13.60. So if you've jumped onto this trade, I would hold it. I would see no reason why we can't hit 13.55, 13.65. That 10-point band would be my target. I'm not even sure if I'd be shorting it there. I don't think I really would. What have we got? What have we got? We've got a trend line going back to 2014. That trend line is at 13.55. Okay, so 13.55 is resistance. Maybe I would be shorting there. I'll have to have a look at it and see what daily candles we get. But a break above 13.65 would certainly be the next big buy signal. Then we'd have to get through 13.75, which is the high from 2016. Silver's interesting. It hasn't quite kept up with gold, but it is pushing higher today. This is the weekly chart. This is the obstacle. The 100 and 200 week moving average is around 16.20, 16.30. Get through there, and we have a big buy signal for silver as well. It's tempting just to buy it now and assume that it will follow gold higher, but that's not what you're supposed to do. But it's certainly got some catching up to do with gold, I think. Let's just put a trend line on here. Okay, that doesn't work. Yeah, that's all I can say for gold, for silver, really. Okay, even the S&P, I've been pretty bullish of this recently after it broke various resistance levels, and it looks pretty good at the moment. Okay, we've reached this trend line up at 27.91. I did have these levels as target, so we're higher as expected. We're going where we should be. We're testing resistance in the 27.90 area. I don't really see any reason why we're going to reverse from here. Yes, we're overbought. What do I see on the weekly chart? No, nothing to tell me that we're going to reverse. So we've obviously got to get through 2600. That's why. But I don't think this trend line is going to be strong enough to halt this market, despite the overbought conditions. I certainly think it's too risky to be short. If you're long, looking for a good place to take profit, well, that's a good reason to take profit. And then you can jump into a long again on a break above 2800. What am I saying? Dow Jones, I've been bullish for a while, and it's still going. It had a great day. Are we now into Wednesday? Oh, no, that was Friday. So yeah, Friday was a good day, and we're pushing a little bit higher today on Tuesday, even though it's Wednesday in Thailand. Yeah, that's it. Just looks good. Nasdaq's still hovering around the 200-day moving average. You know, it's doing its job, isn't it? It's definitely doing its job, but we haven't turned around from here. So I think we will eventually break higher. But that is obviously the key to direction, and that stands at the moment at 70.68, which seems to be exactly where we're trading. I think the DAX is on the verge of a big break. This is the inverse head and shoulders pattern, which I've showed you already on the last video. Neckline at 11.330, call it. We've had a little peak up there to 11.368. I just think this is going to go. It's just a feeling, but you know, the pattern's there. It's all set up. Once we go, we'll go pretty quick. We could easily run up to 11.900 very fast. I don't see why I can't get to 12,300. Eurostoxx has already broken the necklines and the head and shoulders. We're not seeing any follow through yet, but don't see why this won't keep going higher either. It looks very positive. Dollar versus the Swedish krona. It's been a nice little trade. It's not been the easiest one to trade. If you bought the breakout here, you had a good run up. We didn't quite get the retrace to the support line. We got to 918. I didn't get a chance to buy it because I was being silly and waiting for 9.15. It didn't happen. If you are long, you've had a great day today because we spiked up to 9.41, but we've pulled back now to 9.30. I don't know what to make of this. This isn't what you want to see in a bull move. Maybe we'll now finally retrace back to the teens and we can buy it again, because I don't see, this really should go. We're just pulling back today. Not sure why that's happened. It's slightly concerning, but anyway, as I say, it might give us a chance to get in around the teen area. This bull flag's one we've been watching, the GBP versus the Swiss, and the bull flag has just worked perfectly on the break. We've rocketed up to 130.75. So if you were watching it and if you had your trend lines on here and if you're buying it on the break above 130, you've already got 70 pips in the bin, and this should continue higher. I don't see anything to stop us, do I? No. The only thing I can see on the weekly chart is the 200-week moving average, and that's up at 133 and change. So, well, could we jump another 200, 250 pips? Yeah, certainly. I don't see. All we've got to do is get through 131.20, 131.30, and then we're off again.